Welcome to this panel discussion organized by the Center for Economic Policy of HKUST. Today, the topic of our discussion is central bank digital currencies, implementation, applications, and challenges. So we know that central bank digital currency is now a very fashionable topic and receive a lot of attention, and some countries has already implemented central bank digital currency, and we also know that China is seriously considering issuing central bank digital currency, and Hong Kong also is considering issuing central bank digital currency as well. So it's a very important topic, and today we are very happy to have a panel discussion led by two panelists. The first panelist is Professor Berkeley EICHENGREEN, who's the George C. Pardee and Helen N. Pardee Professor of Economics and Political Science in the Department of Economics, University of California at Berkeley. Professor EICHENGREEN is a world-leading expert in many things, actually. Among some of them are the international monetary system and currency internationalization and currency in general, financial markets, and things like that. So the list is too long for me to complete it. Outstanding academic, obviously. The second panelist is Dr. Yong XIA. He's the global head of HSBC Lab and the board director of Corda Network Foundation. Dr. XIA is also the managing director of HSBC. He received his PhD from University of Zurich, Switzerland, and has published many papers in international journals and conference proceedings. So he is now in the Department of Venture, Digital Innovation and Partnership. So very experienced in the area of digital currency. So okay, so without further ado, I would like to start our panel discussion. The way I want to do it is I would sort of suggest some questions. I would pose some questions, and then I would ask one of the panelists to answer, and then after he has answered, I would, if there is time, I will ask the other panelists to see whether he has anything to add, and then I'll move on to the next questions and so on. Is that okay? All right. So first of all, I think it is good for us to talk about some introduction about the topic. So what is central bank digital currency, or CBDC, and what is its purpose, and how is it different from traditional currencies? So this question, maybe I will first ask Professor Berkeley EICHENGREEN to answer.
So Edwin, thank you for moderating this. You relieve us of the need to prepare anything. What a central bank digital currency is, that's easier to answer than what the purpose is. There's some real questions in my mind about the second question. But a central bank digital currency is, you can think about it as a digital version of the currency note in your wallet, in your back pocket or your purse, that it's a direct claim on the central bank. It's legal tender, so you can pay your taxes with it, but it comes in digital form. Some versions of it do not involve the intermediation of any other financial institution. In other words, you don't have to go to a commercial bank to obtain it or deposit it. You can do that directly with the central bank. Some versions imagine that everyone attending this webinar will have an account with their central bank in which they will hold and from which they can withdraw and use digital Hong Kong dollars, US dollars, Chinese renminbi, whatever. There are other versions in which a commercial bank will operate those accounts on behalf of the central bank. So that's my understanding. The best I can do to describe what it is and in brief compass how it would work. What the purpose is really isn't so clear. People say this is a way of bringing money into the digital age, into the 21st century, in the same way we moved from copper coin to paper money to checks drawn on bank accounts, and to credit cards. The next step in terms of money and payments would be a digital version of the dollar in your wallet. And I think we're going to have a long conversation about whether that will make a big difference and whether the benefits will justify the risks.
Okay. Professor Xia, do you have anything to add?
Okay, so I think Professor Ryan and Professor EICHENGREEN, and you are all the economic professor. I have a more technical background, so maybe I will from the technical viewpoint to add something. So actually, based on my opinion, the CBDC is a form of a digital money. And there's, from the technical viewpoint, there's some definition. One of it is a cryptographically secured secured digital representation of value or contractual rights that usually use some type of the distributed ledger technology, so-called DLT, and it can be transferred, stored, and traded electronically. This is the technical definition. So about the purpose, so I'm thinking of, I think it's a kind of the last mile of the whole digitalization in the financial world. So we can see, especially when I worked at bank, right? So in the last 5 decades, we have just not only in HSBC, but nearly in every banks, we have a lot of IT technology projects. The main purpose is that we more or less digitize all the banking process or the banking work, right? So, and make the things as automatic as possible to improve the efficiency of the, to improve the efficiency related to the banking transaction, transfer, all those kind of things. And most of the process currently are digitized and it can be run automatically. I can today, I think very few people will go to a physical branch to do any real business. Usually they have a mobile phone, have a mobile banking or internet banking to handle all the process, and all those processes are also at background, at the back end in a bank was automized. And the paper money, I was call it the last mile. Still people are using the paper money, and if we are using the paper money, those processes will be handled manually. So with a kind of digital money, more or less we can digitize and automate the whole process end to end. I think this is one of the maybe the intention from the central banks.
Well, I think we more or less have an idea of what CBDC is. I think the technical aspect of it, it's interesting, but maybe for people who use it, it is actually not that necessary to know too much detail. But if we have time, we can go back into the technical things about the CBDC. I think I would like to actually move on to talk about what are the advantages of or benefits of CBDCs. I'd like to ask, maybe in this case, because it's probably more about the economics aspect. So I will continue to ask Professor EICHENGREEN first about this. So will CBDC reduce transaction costs or homogenize payment infrastructure among service providers? And maybe other, yeah, I mean, there are many topics about this. What are the benefits of CBDC? I just want to, first of all, focus on the transaction cost aspect. Professor EICHENGREEN.
The answer is no.
It
will not significantly reduce the cost of transactions. So think about the case of Hong Kong. Hong Kong has a faster payment system, FPS. No?
Yes.
So people can transfer funds between banks and e-wallets at basically no cost, at minimal cost, by entering the mobile phone number or the email address of the recipient, and the funds become available to the recipient almost immediately. So I'm reading off the FPS website, but I'm making a point that money is already digital. Payments are already digital, and there are both government-sponsored initiatives to make payments at very low cost, as well as private sector initiatives, PayPal, Google Pay, Apple Pay, Alibaba, you name it. There's a separate set of issues that Edwin did not raise and that he will later about cross-border payments, and I'm leaving those aside for now, although I'm equally skeptical that central bank digital currency will make a difference there. But the point is that payments are already digital, and they can already be made at very low cost. So I bought my coffee after lunch today using my credit card, and the vendor was charged 1% of the value of the transaction, about, what was it, 3 US cents on the $3 coffee. A central bank digital currency might take 3 cents off the cost of my coffee, but it won't make a significant difference in terms of payments for countries where people have credit cards, where their governments operate fast instant payments systems, and where there otherwise already exists digital payments technology.
Okay, it's very interesting. So currencies are already digital. So why do we still need central bank digital currency? Dr. Xia, do you have any comment on this? The transaction cost, as in particular?
Okay. So when we think about the question is, do we need the central bank digital currency, right? So when I think there's several things, right? So one is that yes, I think the people in the developed country, especially in the big city, right? They have the access to our banking system, but they are also the people in the rural area, the so-called unbanked, the people, right? So they do not always have the access to our the banking system. This is one point. The second is that if the money is issued by the government, more or less about the government, or of course the government can delegate some of the task to private company. However, no matter it's directly issued by the government or it's delegated to the private company, they must fulfill certain, I would call it like a public service, right? So they must fulfill certain criteria to get the license to issue the money. That means the issued money, the whole work, they need to serve the people, not only in the city, but also in the rural area, also provide a service to the unbanked people. And the people do not necessarily to have a banking account and can still use the money to do the transactions. Just think about the cash, right? I have a cash, I don't need to have a banking account. So I can still use those cash. And from my viewpoint is currently what I can observe is that for certain like PayPal or like Alipay and SimpayPay or so on. So first it's related to the inclusive finance, right? So the sum of the service, it's good for the people in the city or in the developed country, but not necessarily in certain rural area. Yeah.
I kind of have a response to that one as well, which is that if you live in a rural area and you don't have a bank account or access to a bank teller machine, whatever, you're not going to have a smartphone or ready internet access as well. So India has a problem of people being unbanked, but a larger share of people in India have a bank account than have a smartphone onto which a digital wallet that could contain Cbdc could be downloaded. And they often do business in areas where even if they had a smartphone that could house and transmit their Cbdc transactions, they couldn't connect with the internet because there aren't cell phone towers within range. So Cbdc is not a magic bullet that will solve the problem of financial inclusion. You've got to give everybody a smartphone, telephone account, and internet access. And then if you add a Cbdc, they can use it. But they would probably rather use their debit card or credit card, easier. And you know, I mentioned the fact that when I used my Visa card to buy a cup of coffee, it charged me and the vendor 1% of the value of the transaction. But that wasn't simply for the payment. Visa also provides me with fraud protection. It offers me a credit line if I want to run up a balance that I pay at the end of the month. I get a package of financial services, including payments for that 1%. And I wouldn't get any of that other stuff from the Federal Reserve if I had a Cbdc account there.
Okay, so right, so Cbdc, according to Professor EICHENGREEN, may not be the best solution to financial inclusion. Maybe there are alternatives that may be better, right? So that is an interesting question here. Okay, so maybe we may come back to this again, but let me just move on to another question about the possible benefit of Cbdc is, does it foster like competition? Does the Cbdc foster more competition and perhaps make the financial system more efficient? Make, for example, more competition among the deposit receiving institutions or among the payment systems, and or does it? I mean, does it actually make does it actually foster innovation? So let me ask perhaps Dr. Xia about this. Or do you think Cbdc will have the effect of foster more competition and more innovation?
Okay,
in the financial
at the beginning we mentioned, right? So we have the CBDC definition, right? But the implementation of the CBDC is not finalized, right? So we, as you mentioned, we can see that currently in China and in Sweden, the CBDC is in the pilot phase, right? So although they are already billing transaction have been done with the real CBDC, but it's not formally in the production, let's say, still in the pilot production. And also the development of the CBDC, they have people have a different model to implement it. So it's not say existing one, and people are using the newest technology to try different way and try to explore the try to find the new business model, new technical implementation to improve the efficiency of the money circulation and so on and so forth. So including I mentioned the financial inclusion, and of course I would say as designer. Or the central bankers, or the designer of CBDC, or the central bankers, when they do the design, I think they should not make this competition happens, right? Because the main purpose of the central banks is they are more at the macro economic side. The main functionality or the main objective of the central banks, and that they should not they more or less they can set up or define more regulatory rules, and let the not necessarily they make themselves as a competitor of the industry.
Okay.
So Edwin, I have 3 answers to your question for the price of 1. Okay. First answer is there's already plenty of competition in the payment sphere. There's PayPal and Apple Pay and Google Pay and Alipay and Tencent Pay and you name it. The private sector is competing the bejesus out of this problem. Why do we need to add central bank competition? That would be answer number 1. Costs have come down dramatically in the payment sphere already through the good old private sector competition. Answer number 2 is that CBDCs are designed to suppress competition. Why is China moving ahead with an ECNY? Partly because it was concerned that Alipay and Tencent Pay were going to dominate the payments sphere, and the authorities were going to lose control to this competition. And answer number 3 is that it is alleged by some, not by me, by some, that a CBDC is important for Web 3.0 and DeFi. In other words, decentralized finance applications, smart contracts, and all these automatic transactions that occur on the blockchain are based on the Ethereum blockchain and on the stablecoin associated with that. And we've learned recently that stablecoins are not always stable. So we need a we need a CBDC to run on a blockchain where private entrepreneurs can build decentralized finance applications on top of it, and then we'll have real innovation. So that's the argument. I think the argument is wrong. I think that decentralized finance will not take off because we have trusted intermediaries for a reason, because verification of those smart contracts is subject to manipulation, and that we've seen all kinds of fraud and defalcation in the crypto sphere, you know, Mt. Gox, you name it. Central banks don't want to be associated with that. They're not going to want to see this kind of activity built on their central bank digital currency. So I don't think any of that's going to happen either. So that wasn't the answer you expected. There you have it.
Interesting. So Dr. Xia, you have any response to that, or?
So just one by one, right? So let's start with the last one, related to the Web3 and the DeFi, right? So first we heard about the stablecoin story in the last several days, right? So there are different types of the stablecoin, right? So and some of the stable coin, they are pegged with the USD, right? So like USDT and the USDC, right? So they some of the stable coin, they claim that for every coin they issued, we'll say $1 coin they issued, they will more or less put one a real fiat money in the a reserve account, right? So for this kind of stable coin, it is very, very stable. So in the last event, we can see the volatility is very small. It's go around. There are different coin based on our data, right? They are going between the 0.9975 to 1.007. Right, so that means one stable coin, when US stable coin is equivalent to 0.9975 to 1.007, so at least range, right? And they are very stable. There's also another kind of a stable coin. They are pegged with pegged with the precious metal, and in this case, the price is stable relative to the gold or to other precious metal. They are also stable, right? So as mentioned, there's some of the coin they use so-called a DAO mechanism. The third one is also quite stable, right? So they use more or less a certain it says anyway the collateral behind it. Right, the one which we have a problem, we can see the problem is so-called uncollateral stable coin. Right, they have the problem in the last event, and they are currently there are 18,000 of different cryptocurrency. Like any new new things, I think there's some bad things around it. Just like we also have some entrepreneur to build some company and actually to do the bad things. But we can see still the major trend is that the money, the cryptocurrencies are quite stable. Yeah, and we can further observe that like the Bitcoin, they are the correlation between the Bitcoin and the SP500, and we can clearly see the correlation between the Bitcoin and the Ether with the SP500, and the volatility of take the Bitcoin as an example. The volatility of Bitcoin is more or less close to the stock of Tesla. This is the data we can observe, right? So from my side, I still believe the Web3 and of course the Cbdc or the stable coin, as the Professor EICHENGREEN mentioned, yeah, could be an instrument there, and I also agree that especially I'm myself from the banks, right? So. In the traditional banking system, we need to do the so-called KYC, ML, anti-money laundering, all those kind of things. And as I mentioned, related to Cbdc, there's no defined way of implementation of the Cbdc. The people are still exploring different way, right? So of course no matter it is in the Web3 world or in the Cbdc world, including us, right? We are working on say how could we put the regulatory rules, right, into the into the CBDC stablecoin or the crypto world.
Okay, this is very interesting. So I think the question is that if stable coins, if the market issued stable coins are stable, then why do we need the CBDC, right? So maybe we will come back to this question again later. But let me move on to another topic about the possible benefit of CBDC is, will CBDC actually facilitate cross-border payment, international payments? If so, how? For example, does it lower the cost of international payment? Does it make it faster? So Professor EICHENGREEN, do you have something to say about this?
Sure. So let me just preface that by saying I agree with what Yong just said about the important distinction between fully collateralized and partially collateralized or uncollateralized stablecoins. Fully collateralized stablecoins ought to be stable, but they don't scale. In other words, I have $1 in my wallet that I can use to buy anything. And I'm going to give that to you in return for $1 worth of stablecoin that I can use only for buying Bitcoin and 2 or 3 other purposes that is not widely accepted. That's taking something that is liquid and fungible and exchanging it for something that's illiquid and not fungible. Not very many people are going to want to do that. And clever entrepreneurs are going to find ways to shave around the edges of that full collateralization. That's what Tether has famously done. So, that's another argument, I think, for regulation in this domain, because there aren't going to be any fully collateralized stablecoins in the long run. They just are not an economical proposition. They won't scale. On the cross-border payments question, it will not surprise you 30 minutes into this webinar that I'm skeptical. From a technical point of view, there's no obstacle to having multiple CBDCs run on a single blockchain where they can be seamlessly exchanged for one another, where I can take my digital dollars and on that blockchain move them into China and exchange them for digital renminbi or the opposite. We know technically how to do that. And similarly, we know how to build bridges or kind of oases in the crypto sphere, where there are designated dealers who can burn one CBDC and create the other one. When a cross-border transaction between me, who uses US dollars, and you, who use Hong Kong dollars, want to exchange my digital currency for your digital currency and make a payment. The problem is with the governance. The problem is with the politics. Who's going to decide on the governance of that blockchain, what the rules are, who the authorized nodes are, how it's going to work? It's like the problem of governing the IMF or the World Trade Organization. Multiply that 10 times, and you can begin to imagine what would have to be agreed in order to see cross-border use of central bank digital currencies.
So, Dr. Xia, you have any comment on this? International payments?
We all see the problem related to today's international cross-border payment, right? So I take myself as an example. My daughter studied in Switzerland for her high school, and I send periodically money to cover her living cost. And using traditional banking system, it takes around 1.5 weeks for me to transfer the money from China to Switzerland, right? So the main reason behind it is that the current the system which I think they are advanced. They were advanced. They are designed maybe 30 or 50 years ago, right? So and of course there's a minor change, but the so-called those correspondence bank system, they are very inefficient. I will not say the technology or the CBDC per se can solve the problem. At least we can use the newest technology, right, to provide a certain the leverage the newest technology, right, to make the things more efficient. Of course, still. From the political side, from the government side, from the regulator side, the rules still need to be defined, right? So to make sure that the newest technology, the advantage of the newest technology are leveraged, the related rule can be made simplified to improve the efficiency. Especially what I'm thinking still related to the cross-border things we are thinking about, especially from my banking side. I'm thinking about like KYC, know your customer, anti-money laundering, CFT, these kind of things, counter financial terrorism, these kind of things. With blockchain, right? So the data, all the data are recorded on the blockchain, and it there's good traceability, and all those things, all those the issues can be solved in a more efficient way. So I still believe that with the CBDC, we can solve the way better. By the way, as again I mentioned, for the CBDC, it's not a final product. The people are still doing the design, right? So a stable coin, or the stable coin issued by the bank. What we heard a lot, like we heard about the different financial institutions. They are issues their own stable coin. This could be a solution, especially when the financial institutions which are heavily regulated. So whether it's when it is picked into a certain currency, and it is Professor HSBC, you mentioned about the scalability, right? So it's of course when it is patched at 1-to-1 ratio, for the heavily regulated financial institution, because the banks need to give the financial reports to the regulator in a daily, weekly, or even a monthly basis, right? If they want to scale it, it's not necessary to be fixed to 1-to-1. On the other hand, because they are heavily regulated, hopefully, comparatively speaking, there will be a risk to the financial stability of one country.
I don't think we need CBDC to bring down the cost of Dr. XIA's tuition payments to Switzerland. I think the private sector is already solving his problem. SWIFT, which is a consortium of private commercial banks, has SWIFT GPS, which is designed to send messages faster at lower cost using the internet. Ripple, a San Francisco company, works with banks to use its proprietary technology to transfer funds across borders more quickly. The holdup is with the know your customer rules and all that the banks need to verify that information before the money goes from your account into the Swiss boarding school's account. And a central bank digital currency will not solve that problem. The Hong Kong Monetary Authority is not going to be able to monitor know your customer rules for every single CBDC transaction. They're going to probably outsource that using the indirect wholesale CBDC approach to existing commercial banks. And existing commercial banks are going to have to do exactly the same thing they do now in verifying that you're a real person and that the Swiss boarding school is a real person or economic entity before the transaction is finalized. So technology is part of the solution here, but it's not necessarily the central bank that's going to be the source of that technology.
Yeah, come back to this question related to the SWIFT, right? First, we talk about the current situation. The current situation is that it takes a long time to do the money remittance, right? So this is the fact currently now. Of course, also related to SWIFT, so far as I know, they are also doing the innovation, including some innovation project, right? They are modernize the current SWIFT system, the SWIFT, the rules and so forth. And one of their project is where they will include the CBDC functionality. The current, we must admit that the current system is inefficient, and of course, like SWIFT and all other banks or financial institution or private company, they are thinking about to provide a new way to improve the efficiency.
Right. Yeah. So the question is whether CBDC is the solution, or whether the market can improve itself. So this is very interesting about the international payment, but let me just move on to another topic, which I think is also very, very important. Is people are concerned, especially in the financial sector, whether the emergence of the CBDC actually can affect the business of let's say the commercial banks or the existing payment platforms such as Apple Pay, WeChat Pay, Alipay. I mean, will their business be hurt as a result of the emergence of the CBDCs? How will they have to respond to this? How would they have to respond to the emergence of CBDC? Dr. Xia, do you have any idea? You are in the business sector, obviously. So how would the company respond to this? You know, the emergence of CBDC.
So about this about the CBDC, I just want to mention several. For this your question, I want to mention several points, right? So first is that the private company, whether private for first day, I would say for the CBDC, it's not a finished product. It's a product to be designed, right? So this will include that. Take the example, right? So if we see in the beginning of this year, HKMA asks, say, what could be the distribution model or implementation model of Hong Kong dollar, right? So they proposed the 4 model. I just mentioned is the last model. The last model is more or less say the HKMA, they define all the rules and they delegate to other financial institution to issue the stable coin, right? So but it is also called a CBDC. So it's not say a CBDC must be issued from it must be done in a centralized way. People are thinking, people are still working on different implementation model of the CBDC. Right? So I think at the end it should not be a competition. It should force the competition of rather than the government play a monopoly role in the payment landscape. It just depends on how the central bank design the CBDC. This is one thing.
Right.
The second thing I want to mention is that, as I mentioned, the KYC, all the AML, this is one aspect. This is from the regulatory viewpoint. From the private consumer viewpoint, there's also 2 things. One is the related to the privacy, right? So as a consumer, maybe I do not want all my data be used, or the tech giant use my data to monetize the things. I want to keep a certain privacy. It's keeping certain privacy. I don't think that previously the electronic money, no matter which one, they solve this problem in a good way, and in this area, I think there should be certain regulation, right? So to make sure that the big company, they do not misuse the customer data to keep the privacy. This is also another aspect. This is also, frankly speaking, a challenge to the current what we have related to the electronic money system.
Okay.
So just final word. I say it's not, say, the private. Again, in the future, so I think if the money need be issued, it should be issued by a institution which are heavily regulated.
Okay, so Professor EICHENGREEN, what do you think? What do you think is the possible impact of the emergence of CBDC on the financial sector? I understand you are not in favor of having CBDC, but suppose they actually issue CBDC. Do you think it have a lot of impact on the financial sector?
Well, I think a lot of the discussion we've had of CBDCs is a defensive move on the part of central banks, motivated by fear that they're losing control of the payment system to private sector entities, Alipay, WeChat Pay, etc. I think the best solution to that, as Dr. XIA said, is to regulate strictly those private payments providers to ensure their stability, to ensure the integrity and privacy of your data, and so forth. That would be a more direct way of dealing with that problem, the problem of payment system stability and confidentiality, rather than experimenting with a CBDC. The other argument here is that control of the payment system is an important source of real-time information about the economy for central banks. And if that information now migrates to and is intermediated by private companies, the central bank will no longer know as much about what's going on with the economy in real time. I think that argument is spurious. I think there are lots of other ways. Google location data, for example, to know who's traveling where and buying what. I do think the problem of data confidentiality here is absolutely key. And I very much agree with that. And I worry a lot about how these big platform companies are going to use your payments information to more efficiently price discriminate and extract surplus from us, or to exploit our behavioral biases to get us to buy stuff we really don't need. However, I also worry about data confidentiality when we talk about central banks. So the People's Bank of China tells us if we're going to have a small denomination ECNY account, we only have to give them our phone number. Well, if I give the PBOC my phone number, if I'm a Chinese resident and I give the PBOC my phone number, aren't they going to know everything else about me as well? And if I have a large denomination CBDC account with the PBOC, so that I'm a company that does cross-border transactions, I have to give them all kinds of information about myself and what I do. So I think data confidentiality issues arise there as well. And the PBOC has told us, I'm citing that example because it's the central bank that's furthest ahead in piloting its digital currency. It's told us there is going to be a firewall between payments information and other information, and that we shouldn't worry about these things. I'm going to stop there.
Okay. Yeah, so yeah, on the one hand, in other words, we have to worry about privacy, whether or not is the market providing this digital payment or digital currency, or whether the central bank is providing it. We will equally worry about privacy. So let's now let me try to move on to another topic, which is about financial stability, monetary policy effectiveness, and things like that. So, Professor EICHENGREEN, I want to ask you, with the CBDC, what do you think the CBDC will, how would it affect financial stability, or maybe specifically, how does it affect the money creation mechanism in the banking system? In other words, does it affect monetary policy? Does it affect financial stability? Does it make monetary policy less effective or more effective? And things like that. What do you think, Professor EICHENGREEN?
In terms of the effectiveness and implementation of monetary policy, in principle, it would make possible negative interest rates and therefore eliminate the need for quantitative easing or asset purchase programs like we've seen in the last 10 years. So if you're Ken Rogoff at Harvard University, you think that if we could be confronting people with negative 4% interest rates or negative 6% interest rates after the global financial crisis, or in the early stages of COVID-19, central banks wouldn't have to have expanded their balance sheets and engaged in quantitative easing and all that. So what that means, of course, is that they would be taking away 4% or 6% of your CBDC account every year. That's a negative 6% interest rate. I think that in countries like mine, in the United States, that would be political dynamite. It could not happen. And any central banker or politician who proposed that would be impeached on the first day. So that's an interesting idea that is not going to happen. I think the real threat is to financial stability, because if there is doubt about my bank, if I'm sitting in 2008 and I have an account at Lehman Brothers, and I begin to worry about whether Lehman Brothers is going to open next Monday, it'll be even easier for me to withdraw my money from Lehman Brothers and deposit it with the Fed if I have a CBDC account with the Fed. And I know the Fed is stable. It can act as a lender of last resort to itself. It can print as much money as it needs to pay off its debts. So the risk of bank runs and banking panics, at the first sign of trouble, everybody runs away from the commercial banks toward their CBDC accounts, is correspondingly greater. That's the bad news. The good news is that central bankers understand this, and they're not going to let it happen. And the way they will prevent it from happening is they will limit the size of your CBDC balance. They will not permit you to keep more than a small amount in your CBDC account, therefore preventing you from withdrawing all your money from your commercial bank account and transferring it to the central bank. But that in turn means that large value transactions within countries and across borders are not going to be possible. You can either have large value transactions across borders, or you can have a stable banking system. You can't have both.
Wow, that's very interesting. So, Dr. Xia, do you have anything to add?
Okay, so it's of course when we talk about this enforcement of some of the economic policies, there's a big one and there's also small ones, right? So I just want to mention maybe some everyday scenario of the CBDC, right? So one is that take the pandemic as example, or the earthquake, right? So certain of the relief funding from the government or whatever can be issued, can be issued or given to the disaster area, right? So in a more efficient way, this is one aspect, and the other aspect is that this will prevent certain, because the CBDC is a kind of programmable. Certain purpose can be specified with the CBDC for this relief funding. For example, those money can be only used to purchase bread, water, those most fundamental things. So this to avoid so-called corruption in certain organization. So there are some of the functionality in the CBDC to solve related issue. This is one aspect. The second one is that this is still the data. I come back to the data. Of course, there's related to data. There's always some different argument, but from the government viewpoint, right? So if they have a more complete data, they can see the effectiveness of their their monetary policy, whether it's effective or it's not effective, and may make based on those collected data to make a clever choice, all right? To make a clever decision.
Okay, so interesting. So actually, that's a related question about financial stuff. I would like to ask Professor EICHENGREEN as well. We know that China is trying to internationalize the renminbi. Now, at the same time, the Chinese government is considering very seriously issuing digital yuan. Do you think CBDC can actually facilitate the internationalization of a currency, such as the renminbi, for example? And this may ultimately, for example, making the renminbi more internationalized through the issuance of CBDC in China. Can it eventually sort of help to facilitate the internationalization of renminbi, make it like a really international, much more international currency? What do you think?
I think not. I think that most Chinese entities, corporations, state-owned enterprises will not be able to use digital renminbi in cross-border transactions because the size of their accounts will have to be limited to minimize the danger of bank runs. Most foreigners will not use China's central bank digital currency in cross-border transactions because they will have questions about the security and confidentiality of their data. I think the important innovation here is not the digital currency, but rather the cross-border interbank payments system, CIPS or CIPS. So this is China's effort to build a competitor to the New York clearinghouse for interbank payments, CHIPS, and the clearinghouse for payments in the UK, CHAPS. So it's possible to do cross-border interbank payments using a proprietary Chinese system that runs on renminbi, where the money being transferred is not central bank digital currency, but rather money between correspondent bank accounts, just like happens today, but denominated in renminbi and operated by the People's Bank of China. I think that would be the important innovation in terms of internationalizing the renminbi. Now, the fact of the matter is that China established its cross-border interbank payments system in 2015. It's been building it for 7 years. It transacts exactly 2% the value the transactions that the New York clearinghouse, CHIPS, transacts. So in 7 years, they haven't made very much progress yet. They've got a ways to go, but that's where the progress will have to occur.
So you don't think the digital yuan has anything to do with helping internationalizing the renminbi?
I do not.
Okay, it's interesting. Some people thought that is possible, but I think I agree with you. So, Dr. Xia, do you have anything to add? Have you ever thought about whether the digital yuan can help the renminbi to become more internationalized according to your experience in the banking sector?
Yeah. So for first, as I always mention, China is more or less tested the ECNY, and still it's in a pilot phase, right? And the first phase, the focus is more on the domestically, on the domestic market, domestic payment, so currently, at least currently, agree with all of you. We don't see this how the current design of the ECNY helped the future the RMB internationalization. However, I just want to mention it's in the early phase, right? So, and the Cbdc is a new technology, and the people are still exploring a different possibility. So we cannot foresee what will happen next.
I see. Okay, thank you. That's good. So I think although there are other topics we want to explore, but because it's already 10:30, I think I'd like to address some of the questions first, and then maybe we'll come back to address the other topics that I would like to ask. So there are a few. I look at this question and answer here. Okay, so here I have a question from someone who asked Barry. He said, from what I heard from Professor EICHENGREEN, it seems that there is not much value from Cbdc. Does it mean that Cbdc is useless to Hong Kong or the world, that we should not implement it? So, Professor EICHENGREEN, do you have any response to that?
So the argument response I would make is that the case has yet to be made. The benefits of a Cbdc are questionable. They're dubious. I hope that I've done a good job of suggesting that the benefits are not clear-cut and the advocates haven't made a convincing case yet. On the other hand, the costs of a Cbdc could be considerable. If badly designed, it could jeopardize the stability of the payment system and the reputation of the central bank. It could destabilize the commercial banking system. It would be a rich target for hackers and terrorists. So if you want to bring down a country and a government, you want to attack its electricity grid, and then you probably want to attack its payment system as well. So have you heard about the East Caribbean Currency Union's central bank digital currency? It's called Dcash. Back in March, it crashed. It went offline because the central bank and its private partner had not done a software update in timely fashion. You want to go there?
Okay. Okay, so the next question is about, well, he's not directing to any particular panelist, but he said, what are your comments on the Republic of El Salvador's Bitcoin as legal tender? So El Salvador has adopted Bitcoin as its legal tender. So is this considered a kind of, it's not central bank digital currency, right? But it's actually adopted a cryptocurrency as the legal tender. So Professor EICHENGREEN, how do you think about this? The case of El Salvador. What is it?
It makes me wonder what the president of El Salvador thinks about his investment, given the events of the last month. What it means is that you can pay your taxes in Bitcoin or in the local currency, which is pegged 1-to-1 to the US dollar. And it would seem to me you have a better idea of what you're paying if you pay it in dollars, or if you receive your salary in dollars, than if you agree to be paid next week or pay the government your taxes next month in Bitcoin.
Okay, so let me just move on to let's look at this. Okay, so let me just go here. Here's a question for both panelists, actually. Would you say that CBDCs are a strategic response to the rise of private cryptocurrencies? Why would a central bank want to issue a CBDC? So maybe I can ask Dr. Xia to answer this first, and then followed by Professor EICHENGREEN. So let me repeat the question again. Would you say that CBDCs are a strategic response to the rise of private cryptocurrencies? And why would a central bank want to issue a CBDC? Dr. Xia.
Okay, so first, I'm not a central banker, so I cannot I can just guess what they are doing, right? So whether it is they think it's a strategic response to rise of private currency. I think as I mentioned, when the central banks they designed the CBDC, one of the, as I mentioned, one of the purpose is that they want to solve the last mile problem, right? They still in some country we can see that the usage of cash is greatly reduced. However, in some country the usage of cash are still there. And a replacement of those cash, this M0 money, with a digital form, it is. I think that the argument is still valid. Right. This is I think one of the purpose of issuing the CBDC, and whether it can be totally replaced by the private company or whatever. My answer is that we just my answer come back to the design of the CBDC, right? One way is that the government still can delegate to the regulator, the financial institution, to issue the currency, and they define the rule. Right, so this is the way the way the central bank can do. Right, this is related to why the CBDC is useful from my viewpoint, and come back to the private cryptocurrency. Also come back to the other. This is the word related to the trust. We know in the last decade, right? The central banks issue huge amount of currency, no matter whether it's a US dollar or whatever, right? So nearly so the trust on the central banks, as well as the people, whether the people still have the trust on the central banks, right? And is there any alternative, for example, like the cryptocurrency? This is the people are looking for, right? So I don't think to win the trust, I don't think that the CBDC should be an instrument, but a more principled, the monetary policy should be the answer to the cryptocurrency.
Okay, Professor Eichengreen, what's your answer to this question? Would you say that CBDCs are a strategic response to the rise of cryptocurrencies? Then why would the central bank want to issue CBDC? What do you think?
Yeah, to echo what I said before, I think they're a strategic response to the rise of private stablecoins and to the fear that payments could migrate from the existing payment system to the stablecoin sphere. So central banks don't want to lose control and oversight of payments. And again, the straightforward solution to that is not to issue a CBDC, but more stringently regulate private stablecoins. But I'll add to that a prediction that these fears are now going to recede. And going forward, we're going to talk less about stablecoins and CBDCs than we have for the last couple of years. This whole area is imploding as we speak. Not only have cryptocurrencies lost a significant fraction of their value, but stablecoins have seen large withdrawals, whether some have broken their pegs, others have not, but they've all seen large withdrawals. And the urgency with which central banks are contemplating responding to this is going to decline because the phenomenon to which they're responding is going to decline.
Interesting, yeah.
You know, we're talking about what happened before the Fed began raising interest rates. We're now in a new regime, and this whole crypto sphere is going to get smashed.
Okay, all right.
Maybe I just add a comment also here, right? So, so yes, we see the drops in the crypto world, but we also observe the loss of value in the equity and also in the bond market. So the drop is more or less equivalent. I would say not equivalent, but correlated, right? Yeah, it's more related to this is because the Fed raised the interest rate, right? So I think the crypto asset is just the asset class, a new asset class, like the equity and the bond.
Okay. So here I have a question. It says that crypto regulation seems more concerned with stable coins than other type of crypto. Is it because it is a direct competitor to CBDC? So Professor Eichengreen, do you think it is true that crypto regulation seems to be more concerned with stable coins than with other type of crypto?
No, I think regulators are concerned about both, and now they're going to be more concerned about both, given recent events. They're concerned about naive investors getting ripped off by crypto schemes and crypto entrepreneurs. They're worried about the financial stability repercussions of sharp movements in the value of crypto assets, now that otherwise respectable financial institutions are moving into this area. I think in the domain of stablecoins, they are concerned because fully collateralized stablecoins hold US Treasury bills and bonds as collateral. They don't hold mainly bank deposits in Taiwan, Tether, or elsewhere. They hold mainly US Treasury securities. And if they had to dump several billions of those into the market one morning because of redemptions of their stablecoin, that could severely disrupt the operation of US Treasury markets. So regulators are concerned about that aspect as well.
Okay, right. So, so far, these are all the questions that I have. Maybe there may be more to come. But so let me now come back to some of the questions that I have not finished asking, which is okay. So concerning consumer protection and law enforcement, so some of you have already talked about this. Actually, I mean, is CBDC, how will the CBDC protect privacy? Okay, that is a question that Barry actually raised. Should we be worried about privacy? So the central bank is able to track every financial transaction that you have made. So would this be actually kind of a big concern, right? For privacy? And to make a more concrete example, I mean, suppose a country issues CBDC, would it actually enable the government to actually more closely monitor the financial activities of its citizens? Or is it the other way around, that it actually protect the citizens more from fraud? I think this is the kind of question that people are thinking about, right? Is it good or is it bad, or is the good better? Is the good side going to kind of dominate the bad side of it? So that is the kind of thing I'm interested in. So what, and also we would also talk about money laundering and criminal activities in addition to the privacy kind of stuff. So what do you think? Barry, you already said something about it, but do you have any more things to say about this, the pros and cons of protection?
Well, I think in principle, so in 2011, I wrote a book called Exorbitant Privilege about the dollar. And I started that book by observing in every movie where there is a crime and a casino robbery or a payoff, there's a suitcase full of dollar bills that exchanges hands, that this is the currency for all kinds of illicit transactions. The central bank would be able to track those transactions in principle, reverse them out in principle if it detected them. Whereas once the dollar bills, the cash, go out the door, in whose suitcase or under whose bed they are housed, the central bank has no idea. But that comes up against the anonymity that actual physical cash transactions provide, that a CBDC would not under the circumstances that I just described.
Right. So there will be the laws of anonymity in some sense, right? So Dr. Xia, do you have anything to say about the protection of people offered by the CBDC, or the loss of privacy, or the benefits of reducing money laundering or other criminal activities? I mean, do you think the pros dominate the cons of CBDC in this aspect, in this particular aspect?
Yeah, it's like again, come back to my early statement, right? So I always say it depends on the first, the CBDC is not a finished product; it's a product to be designed, right? So when we design, when the central bank designed the CBDC, we need to make sure that we have a more try to leverage its advantage and try to eliminate the weakness, right? This is what come back to the anonymity, and Professor Aishin Green mentioned, for example, in the implementation in ECNY, right? So the for using of a small amount of the money, only the telephone number is need to be given, and the telephone number could be a telephone number of any country. It's not necessarily a telephone number from China. So more or less, the government do not have a way to track the money flow of a small amount of transaction, say under, I don't know, 200 USD or whatever. It's like a cash. And this is one thing. The second thing is the question about to say, yeah, whether the government will have too many information, right? So today, this is already the case. Just think this example, right? So first, all the bank and the financial institution, as an employee working for a bank, we need to give the so-called financial reports, the regulatory reports to the regulator in all the markets we operate, right? This in some market include very detailed transaction, the financial information or transaction data. So more or less, if the government want data, they already have it today. It is not because CBDC is designed. The data are already at the hand of the government. So CBDC will not change, or will not bring more data to the government. They already have the data in today's situation, in the traditional in the today's banking system, the IT technology system. We will already submit the data in some market, nearly every market, but just how much data. So this is the only difference. So I don't think that this is because of the CBDC. On the other hand, I want to mention one thing is that one important thing is that a regulator, we assume a regulator do not attend the commercial commercial activity, right? They are the judge. They are not the player. So in this sense, right? So if they get more data, and they issue the more regulatory rules, right? So and make sure that no, so certain tech giants have. You use the term which Professor HKUST you just mentioned, the platform operator, right? That they comparing to other in a commercial world, in a competition world, the commercial the certain platform player, they have more data than all other player in the ecosystem. This is an unfair competition, right? So the data. Especially also for the private companies, especially those platform player, they in order to have a fair play in the market. I think if the data goes to the regulator rather than goes to the platform player, it will build it will force the competition and have a more healthy commercial environment.
Okay, so interesting. Speaking of this protection of privacy or anonymity and stuff, I realized that Dr. Xia, you have mentioned again and again that this is the CBDC is a work, like a work in progress. It is still yet to be implemented. It all depends on the implementation. This is really true. Could you sort of just briefly explain to us what are the possible modes of implementation of CBDC? For example, you can use the digital yuan as an example, right? So I understand that it can be there is some thinking about what are the possible modes, right? The centralized versus decentralized, right? Or blockchain versus non-blockchain technology, or maybe other dimensions that you may know. Can you sort of briefly tell us about what are these possible modes of implementation, and what is the mode that is most preferred by regulators. For example, you can use the China situation as an example to tell us about this.
Okay, so related to first, I answered the technical questions more. I'm more good at the technical things. So for first, to answer the question related to the blockchain on non-blockchain, right? So until now, we HSBC, we talk with the different central banks, so participating in the many POC with the different central banks across the world, and nearly all the POC, nearly all the pilot, I would say the blockchain technology are used in one way or another. Right, so it's so to answer the last question, blockchain technology will definitely be used just in one or another. How much percentage? But they are used. This is due to the advantage of the technology itself. This to answer the question. The second one is about the different model. Again, just like you say, they are totally centralized model, right? So more or less the central bank they make the operation of all the central banks, the Cbdc, and do the issuance and let their currency to be circulated directly to the private household and also to the enterprise. This is one way, but I don't think this is from a technical viewpoint, it's a technical feasible way. Take the China as example. if the PBOC they want to build such a system, if just take in the lunch time, if all Chinese people they go to restaurant to purchase their lunch, just think of the transaction per second. The huge amount of transaction per second need to be handled by the central banks. I don't think the central bank are able to handle such a huge amount of the work. So I don't think a fully centralized system is possible at all. And then it must be in certain. It must be designed in in a certain way of in a certain distributed way, and then come back to the model. One is that they will delegate, for example, the other financial institution to do it. In the China case, for 6 of the state-owned bank will play the operational roles, plus Ali and the Tencent. They will also play the role for the money distribution. So more or less, the central bank they distribute a lot of operational work to these 8 stakeholder and 8 participant, and then let them to further distribute the money to the small banks and then through those small banks to the private user and the enterprise. Right, so this is the way, and as I think in a smaller country, maybe even more distributed or decentralized way, a kind of decentralized way can be implemented. As I mentioned, so one possibility is that the central banks or the like HKMA they just define all the rules and then let the regulated financial institution or regulated company, whatever, they issue the stable coin, but there should be some collateral. They should put say, certain money or whatever deposit in the reserve account of central bank, and they should regularly give the financial or the regulatory report to the central banks to make sure that there's the way of their operation that does not bring the risk to the financial stability in that market.
I see. So, Professor EICHENGREEN, do you have anything to add? And also, do you have any final words to say? In addition to what Dr. Xiao has said.
No, I agree with much of what's just been said. There are some interesting questions in the chat from Mark Dordahl. I want to answer one of them. Mark asks, how would you pay off-grid or off-internet if hard cash is replaced by digital-only money? There, Mark, you should go and look at the website of the Central Bank of Ghana. So it has done the most work of any central bank in terms of thinking about this problem. So its idea is that you would have a smart card, and when you had internet access, you could download your CBDC onto the smart card, or you would have a key fob, electronic key fob, and you could download your CBDC onto the key fob, and then you would just swipe it across the reader of the corner store when you bought a loaf of bread or whatever. So the Central Bank of Ghana has gone a long way in terms of thinking about and designing this technology, because they recognize that internet access and smartphone access and things like that are not available to the majority of their population. So this is an aspect of CBDC adoption that we do need to think more about.
Okay, so this is so Professor Eichengreen, you already given your final words, I suppose. Dr. Xia, do you have any final words to add, or?
Yeah, I think I mentioned most of one point before. Yeah, no special.
Okay, so it's exactly 11:01 now. So we have a very successful discussion. Thank you. Thank you, Professor Eichengreen. Thank you, Dr. Xia and Mark and all the participants. Thank you very much. And this is the end of our panel discussion. Thank you.